Hi, this is Paul from globaltradingsoftware.com, and this is a xBrat SlingShot trading tutorial and rules video. So first of all, we're going to go straight into it. This is probability, pullback zones, targets and trailing stops. So remember, the SlingShot looks for three types of trades. We're going to talk about those in a little later, but the main type of trade is it pulls back against the main trend and then continues. So we have the three pullback zones here. The lower one is 75, the middle is 80, and the top is 85. So these are probabilities it's going to go on and hit target 2. We've got target 1, target 2, target 3 there. As you can see, in this case, it just shot through and went through the most. But the most accurate measure of all of these fib extensions, retracements, overlaps is to measure from the pullback zones to target 2. So this is why sometimes some of the guys have a target 2 club and they only trade to target 2. This red line here is our trailing stop position, and we can adjust how aggressive or conservative that is, and we'll go through those settings next. So there are some settings that you can change here, but the default settings are, I would say, they've been back tested, optimized, so they are the settings. So for the type 1 trade, check the box if you want to see those signals. Now, in here we've got the fast EMA period as 5 and the fast EMA displacement as 0. So that's one of our points of control. Then we have the slow EMA at 13, the slow EMA displacement at 4. So I'm not going to go too much into depth about that, but for those sophisticated traders that are sophisticated enough, we'll be able to understand how to change those and adjust for different types of chart or even time frames, but these are the default settings because they are the ones that are hot. So the next one is the type 2, entry enabled with a checkbox there. The only adjustment we've got on there is the max bars until trigger. So 1 is the default. When we go on to explain what the type 2 trade is, you will understand why I only want 1 candle in. So it's 1 candle in, 1 candle out of the area, and that's very important. The type 3, you can enable or disable that. There's no settings for it. And then this is where stop EMA period, this is where we adjust that a trailing stop. So the default is 30. I've got this on 21 just to show you can change it. And again, it depends on the chart type. So if you're on something like a daily or a 30 or a 60 minute, you may want that on 34 or even 55. If you're day trading, you may want that on 21. You may even want it very aggressive on 13. So, you need to test, adjust and optimize. The entry tick offset is basically once we print the signal candle and we say buy, type 1 buy, that start line for the trade where you place your stock market order is 1 tick above. You can change that to 2 or 3 ticks if you wish. Again, default is 1 because that's where we believe is the right setting for that entry. So alerts, at the moment we have email alerts, and you can enable them and put your email in, and they'll send you alerts. But again, if you're scalping and day trading, you're not going to receive the email in time. We are going to add audible alerts to this very soon. And then you can change the visuals, so you can change the colors. Some people are colorblind, so you can change some of those colors for the false breakout stochastic line. If you don't want to use that, you can uncheck it and it won't show it. And then so on and so forth. So they're the main settings. Most of the logic is done behind the scenes. There's a couple of settings we've got in there for sophisticated traders, but as it comes out the box, those are the settings to use. So there's 3 types of buy or sell signals. The type 1 signals are the traditional signals for this type of strategy. So everything is normal. So when I talked about those points of control before, where we can change those 5, those 13s and displacements, that's all done behind the scenes. But what I've done graphically is just show you on here what happens. So on the left of this left chart here, we get the price action come up and then it pulls down. As it pulls down, we can see the cyan line goes through our point of control. Then the price action finds support in one of the pullback zones. That's another rule that the software works out. Then as that price action comes back up through and that cyan line comes back through that point of control, we print the type 1 buy because it's gone past and it's come back up again. And it's the opposite way for the type 1 sell. This time the trend is down, it pulls back, it finds resistance in the top zone here, which is 75%. It's going to hit that target too. During that pullback, we see the EMAs and the points of control cross over that line, if you like, the control line, and then when it comes back through, we print the type 1 sell. So that's the type 1 signals. Type 2 signals is when we get shallower pullbacks, so we don't get that crossover of the point of control, then cross back again, but they're still strong signals. What happens is we pull back into one of the support zones, in this case for the long. One candle goes in and closes, the next candle comes out and closes above this channel. Okay, so it's like a cloud, but it's invisible. The software works it out. But the price action and the points of control do not cross that line, that point of control with all those EMAs, these displacements and everything like that. It doesn't cross. So we don't get the type 1 buy, but we get a type 2. And this is that setting that I talked about where we got it as 1. So it's one candle. It has to do the job in one candle. So it opens above the zone, comes back in to this channel, finds support in our zone, the next candle opens and then closes back out of that channel. Very, very strong type 2 buy. Type 1 sell is, again, you see here, this is a really, really shallow pullback into that 85% zone there. Again, that line, that point of control, we don't see the other points going across and then back again, but it gets one brick in, and this is Unirenko, and then the next one comes back out and closes out, and that's a type 2 sell. The type 1 and 2 signals can combine for really strong potential trades. So in this situation here, you'll see the type 2 sell on one brick, Unirenko brick, and then the next one is a type 1 sell. So what's happened is that that last green brick has gone into that channel, the next one has come out, okay? That has printed that type 2 trade. Then the next candle has brought the price action back across those points of control, all those EMAs, and now it's printed a type 1 sell. So very, very strong. So there's two situations where we've got a confluence of two different entry strategies all saying yes, go short, and there is the resulting trade. Again, the same with longs. We get the type 2 buy, we get a little bit more price action movement, and then the type 1 buy comes in. We get two entry lines, okay, so you've got a little bit of choice there, and then it goes and you can see the trailing stop as it goes through there. So next, the type 3 signals. So these are reversals. So we're going to talk about those in a little bit more detail. So for me, the only real type of reversal is the one that goes and tests a support or resistance zone. So you can see here on the left, we get a type 1 buy, but we're in a big 15-minute zone, and we're going to talk about that as we start to build the picture with the training. But then we get the type 3 sell coming out. So as you see here, we get a candle or a brick close on the wrong side of those pullback zones. So it's broken the trend, and then we get the sell signal and we go short. The same on the right hand chart here, we can see we get a type 2 and a type 1 sell, but we don't short into support. We see the price action then turn back around. We get a candle close outside of the wrong side of those pullback zones, so all those probabilities have gone. We get the type 3 buy, and then we go long. So for me, when we get a type 3, it has to come after testing support or resistance. So confirmations with a buyer's depth heat map is Very, very important. So it's the go, no go gauge of any trading strategy. And again, we would advise our SlingShot users to purchase the heat map indicator to help you get those confirmations. So very simply, we've got 6 different time frames on the bottom and they're all red. So we get type 2, type 1 sell, we got the confirmation. So we've got 2 signals, we've got confirmation, we go short. On the longs, we get a nice move up here, it pulls back into that 85% probability zone, we get a type 1 buy, we've got 6 out of 6 time frames green, we go long, signal, confirmation, go. Very, very simple. In this case here, we get type 1 sells, but we do not get the confirmation. So we've got red, yellow, green on that bias depth heat map. That's our no-go gauge, okay? Then we get a type 3 buy. It breaks out of the top of that pullback zone, which, you know, it's now failed, that trend. All 6 time frames are green. We take the long, and there's the trading stop. So staying safe with the guardian zones, have enough fresh air, it's very, very important. And again, if you have the special edition, you get to use the guardian zones for free for the first 3 months of that 6-month part of that thing, because the guardian zones are very, very important. You can see those confluences of support and resistance. We can then, again, if you've not got enough fresh air, you're not going to take a long or a short. We're going to talk about that. We're starting to build that picture now. So I'm going to start with the most complex one first, and that's the type 3 trade. So with a type 3 trade, we get the buy signal here when the candle closes outside. You see this red doji candle here. The candle did not close outside of that zone, so it doesn't count. Then when we get the buy signal, our entry line is here. Our stop needs to be below the previous pivot before it pulled back into the red zone. So then we've got a stop, we've got an entry, and we can work out a risk reward to the next resistance zone. In this case, there's a confluence of resistance zones on the native and the 15-minute. So we have what we call fresh air. We take the trade, and then you can see the trailing stop here, but it does move into that resistance zone. So that's the most difficult one. And the minimum risk to reward is 1 to 1.6, not 1 to 1, 1 to 1.6. There needs to be enough room for the volume and the volatility in the markets to push that and continue that trade. In this case, it was over 1 to 2. So type 1 and type 2 signals, the minimum risk reward or fresh air is to target 2. Okay, remember our probability pullback zones are measured to target 2. So in this case here, we get a type 1 buy. We've got target 1, and target 2 is just nestling on and in confluence with a 30 and a 15-minute zone. Really good target. So we've got our minimum risk to reward. We go. If we trade it with the trailing stop, it pushes through target 2, hits target 3, and starts to find some resistance there, and our trailing stop comes into play. So we need to put this all together now with the SlingShot, the signals, and then we need those confirmations from the bias depth heat map, and then we need that important fresh air to trade into. So our first example here is that we get, starting from the left, we get price action pull up. It comes back down into the middle probability zone, so there's 80% it's going to hit that target 2. We get support at the native support zone from the guardian zone, so we've got a confluence of both fib retracements and a support resistance zone. Very, very strong. All 6 time frames are green on the bias depth heat map, and our target 2 is in fresh air. The target 3 is just into the 15-minute zone there. So we've got every single rule met. Signal, we understand the behavior, especially here it's pulled back into that support zone, so we've got an extra bit of comfort here. We've got the confirmation, we've got fresh air, we go long. We can either take the profit at target 2, or we can continue to trade with the trailing stop. In this case, it just tipped that 15-minute zone and then came back down again. So don't go crazy on the multiple time frame zones, especially if you're on a chart type like a Unirenko 135. It's a very fast time frame, and sometimes those 60-minute time zones, as you can see, these zones on the 6-minute in pink are absolutely massive. They're not going to affect really, you're going to be trading within that zone, so they're not really going to affect you. Sometimes they can be quite small and quite effective, but in this case you just need to switch them off. So the same chart with them switch them off is this. Then you can see here the price action comes up, struggles in that 15-minute zone, eventually tries to push through, pulls back, and we get that shallow pullback for the type 2 buy. Okay, all 6 time frames are green, loads of fresh air to the upside, take the trade. If you don't take the type 2 trade, remember the stop is always underneath the pullback zone, or in this case, with this being in this 15-minute zone here, put the stop below the 15-minute zone for that type 2 trade, and then the type 1. So we get a type 1 buy, all 6 time frames are green, we go long. Target 1, target 2, target 3, and we can see the trailing stop here. So this is the first time I'm going to talk about these yellow dots. So this is what we call a false breakout stochastic. So what it is this is a strong move. So when the stochastic in theory, behind the scenes, because it's not shown, actually goes into the overbought zone in this case, and then just has those false breakouts and just the percentage K and percentage D keep crossing. That's a strong bullish trend. So when it pulls back against that trend, it's more likely to continue in that same trend. It doesn't happen all the time. It's just one of those additional benefits with the software. So when we get confluence zone, this is important now, and this is where we get that reversal, that trend reversal. But one of the things to note is here, we've got a confluence of 60, 30, 15, really strong. We are not going to short into support. So even though the rules have been met for the type 1 sell, and even though all 6 time frames are red with a buy stepped heat map, we don't take the short. We don't short into support. We've got no risk reward, we've got no fresh air. However, that support holds. We get another pullback zone, and now we get a type 3 buy. This is a situation where we ignore the heat map because the confluence of support zones is so strong. We're looking for that reversal. Remember, previous to that, everything's red because it's all going down. To catch those reversals, we need a type 3 buy. It needs to have tested a really strong support, in this case, opposite way for shorts, and we just ignore the buy step heat map in this situation. Okay, and this is a specific situation that we look for those type 3 buys or sells. And then as we see there, it bounces off, it comes back down, we get another type 1, type 2 buy, but we're already still in that trade, and that trading stock continues to go all the way up. So what I want to do is, I've zoomed out from that same chart so I can look left and look right and look at some more type of trades. So we're going to start from the left and we're going to talk about trades not to take, because remember, even though we're getting signals, we need confirmation from the buyer's depth heat map and we need fresh air. There's just 3 things to remember. It's very simple. So first of all, we get a type 1 buy, but we're not going to go long into resistance. Then you see how we get the type 3 sell. So the trend fails. We've got all 6 time frames in this situation after hitting that resistance, all in red. Okay, we've got fresh air all the way down to this native support zone from the Guardian zone. It's got lots of fresh air. That's about 1 to 2. We go short. Great trade. The next is the one we've just talked about, where we get the type 1 sell, but we're not going to short into support even though we've got 6 out of 6 in red, because there's that confluence of 15, 30, 60 minutes so strong, it's got to have some real volume to get through there. But then we get the type 3 buy. Again, remember that buyer stepped heat map is not going to give the confirmation, but the confirmation is given by that test of that confluence of different time frame support zones. So we go long and we take the type 3 buy. There is an opportunity to even add to your trend reversal at this point when you get the type 1 and the type 2. Remember, getting type 2 then type 1, very strong pullback into the 85% zone. You could add another contract at this point and trade it to target 2. Take those extra contracts off, continue with the original contracts, and you can see the trailing stop actually takes us all the way to this point here. We are not going to add any more contracts at this type 1 buy because we're going into resistance. Type 1 sell, type 3 sell here. We've got support under there. We're not going to short into support. Type 1 sell again. We're not going to short into support. So we just run through these scenarios and signal, confirmation, fresh air. If you don't get them, you don't trade them. Let's have a look at another scenario now. So on the left again, we get a type 2 buy, a type 1 buy. We're in that 15-minute zone. We talked about this a little while ago, but I just wanted to zoom out and go through a little bit more of the chart. So we get a great move up. It finally takes the trading stop out at this point here. We're going sideways then. Then we get another type 1 buy. So we found this short-term support now. We've pulled up, we've pulled back, we've pulled into that middle zone. So there's 80% probability it's going to go and hit target 2. All 6 time frames are green on the buy signal. Go long. Take the profit at target 2 if you want, or when it touches the 15-minute zone, take your profit. Now this is the scenario where you don't take a trade. So you've got a type 1 sell, you've got fresh air, target 3 is in that support zone, but you have red, yellow and green. You don't get the confirmation, you don't take the trade, okay? So when you're back testing, you might think, oh, I should have taken that trade, I'm going to take them all. This lack of confirmation from the bias depth heat map will come to bite you eventually. The thing is to have a strict set of rules: signal, confirmation, fresh air. Then just manage to trade with the trading stop or go to target 2. Understand the different types of buys and sells, especially around that type 3, because there are those instances again, and I would advise you to go back and watch this video and look at those real strong instances where I would take those type 3s. In this instance here, yes, it was a winner, but the rule was broken for us. We didn't get the confirmation, we would not trade it. Stick to those rules and your win rate will be higher. And another situation here, this is copper. It's got to trade copper quite a lot. So let's go through this one. So here, for example, we have the type 3 and the type 1 sell into a confluence of the 60-minute zone. You can see here the 60-minute zones aren't large, okay? They're not like that other example, they're quite small, so we're going to keep them on the chart. And we've got a native time zone, which is a Unirenko 135. So we've got that confluence. So it struggles to push down. We get the type 3 buy. We've got a lot of fresh air to the next 60-minute zone. In fact, that's a 60 and a 15 and the native. That's all those different colors in there. We do get sort of, quite a lot of green in there, but remember, when we're looking for those reversals after support in this case, we need fresh air. Yes, it's great that we got 4 out of 6 that are green, but in reality the support is the trump card here, and we take that long. We get a type 1 buy at this point here, but we're already in this trade. This trade is still live, even if you haven't taken the reversal. Once the price action comes down and takes out that trailing stop, it finds support in the middle zone. It's still printing the zone, it's still printing the entry. So this type 1 buy is still active. If it's not printing the zone and or the entry, it's not active, you don't take the trade. In this case, you see the price action starts to come back up, getting close to that entry point. All 6 time frames are green, enough fresh air to the next big resistance zone, because that's where target 3 is, remember here. So we take the trade, and most people middle of that range, take middle of that zone. If it doesn't push through, starts to pull back down, a couple of bricks in, take your profit. Then we move again, we don't take the sells. Why? We've got fresh air, we've just come off resistance, but we do not have confirmation from the buyer's depth heat map. We then go to that scenario here where we get a good push up. It hits that resistance zone again, pulls back down, pushes through the resistance zones, come back, type 1 buy signal in this case. I was a little late into this trade, to be honest, but because I was trying to make take pictures and trade and get all this presentation ready. So in reality, you would probably just go above this pivot here. The type 1 entries here, but I would make sure I was outside the resistance zone. All 6 time frames green, lots of fresh air to the next resistance zone. So again, there's some scenarios there, and I think, you know, as I'm making more and more videos with the SlingShot, I will try to find other different scenarios, but I've covered most of the bases with this strategy here. So remember, SlingShot, stick to the rules and keep it simple. I've just talked through the whole process here from beginning to from settings, from the pullback zones of probability, the target zones. And remember, a lot of people are just in the target 2 club. They just trade into target 2 and get out. There is the trailing stop there. Keep the rules simple. Understand type 1 and type 2 buys. Understand the combination of type 1 and type 2 are very strong. Understand that type 3. You may want to switch type 3 off and not do the reversals. I know some of our users do that already. I have them switched on because I look for that test of that confluence of support or resistance very, very strong. Get a type 3 and that trend reversal could be what we call a runner. And then just stick to that fresh air rule, okay? Use the guardian zones, understand where you can trade between if there's fresh air, and we talked about those minimum risk rewards for different types of trades, and then it's a good trade. So signal, confirmation, fresh air, go. If you've got the signal, you've got no confirmation, even though you've got fresh air, you don't go. If you've got the signal and you've got no confirmation but there's fresh air, don't go. So you've got to have all 3 unless you're doing that reversal on the type 3. But again, go back and look at this video if you want to trade those type 3s. A little bit more difficult. If you watch it a couple of times, just practice in sim and it will come together. Hopefully that helps. More videos to follow.
That's